I kind of started out in the business, part of it just because I needed places to put my own money, and I, started kind of investing in the market and buying mutual funds and things like that, and watched myself lose money. And so I kind of figured, there has to be a better way to do this, and kind of ended up kind of lucking out. I had some guys that at the time I met, this was back in the late 90s, that were really making a lot of money. And I was like, what are you guys doing with your money? Where are you putting it to grow it? And life insurance policies was what they told me about. And they talked to me about, the ability to have a floor to protect me from losses and the money to growing tax-free. And I've always kind of been a very traditional and maybe conservative just type of guy when it comes to financial planning, that, look, if I can average 6 to 8% long-term, especially on a tax-free basis, I don't lose money, that's going to make me wealthy. And in fact, if you look back at the roots of financial planning, that's what the goal was anyway. You would have your money available for emergencies. You would have your pensions. That was going to be your guaranteed income for when you retired. That was going to cover your food, your utilities, all your basic core living expenses. And then came the IRAs and the 401ks. That was going to be a nest egg that was going to supplement your pension income. Well, what happened today is, of course, the pensions went away, and then everyone has their IRAs and their 401ks that they're trying to use to provide that guaranteed income during retirement. And that's where we have a lot of these problems. You have the statistics, pretty overwhelming. 90% of Americans have less than $250,000 in retirement savings. Half the population doesn't have anything. And most people are kind of living paycheck to paycheck. So to me, it always just was common sense to have the strategy that, number one, gets my money tax-free as soon as possible. Even if I have to pay a little bit of taxes on it now, I'd rather do that than have it grow into a larger amount and then be taxed on it the rest of my life. And then the second aspect is having that floor. And maybe that's something we can talk a little bit about, is having the floor inside of these policies is a very important thing, because that protects us from losses. And that's where, if we look over the last 10 years, we'll have a variety of market strategies inside each policy that we can use to capitalize on what the market's doing based on different conditions. So one of the particular policies that I've had for over 10 years, uses a simple annual cap. So that's kind of the trade-off. You'll have a floor, 0% or 2%, and you'll have a maximum cap on gains, and that could be 14%, like in one of the policies I have. So over the last 10 years, $100,000 in that policy, after costs and fees and everything else, has grown to about $180,000. So that's a lot higher return than most people have gotten over the last 10 years. Most people are lucky if they're break even in the market. But again, because we had that built-in floor that protects us from losses, we didn't have to recover. So all the gains we got were actual gains. Now, while that is a good method, that's a good strategy, it's called an annual point-to-point cap, there are better strategies that we've had now that came out about 4 years ago that really give us unlimited upside. And that's how I've had clients in life insurance policies over the last 18 months get gains in that 50, 60, 70% range. And in fact, I have a video that has some actual client statements in it that shows, one of my clients that got a 52.96% 12-month return inside a life policy. Will that happen all the time? Absolutely not. I think that was a very rare occurrence. The market and the volatility. We saw the crash in about February and March of 2009. Big rebound in 2000 into 2010. So the policies have a strategy that allows us to actually capture all of that gain going up, or virtually all of it, pretty close to it. And sometimes, now that gain is permanent. It locks in. It can't be taken away in future years due to market downturns. While I don't expect that type of return to happen very often, I have seen it happen twice in the last decade. After the market crashed in 2001, after September 11th, market rebounded, and we had clients getting big double-digit gains in 2004, 5, and 6. And then again, after this crash and rebound. So being able to have a strategy going forward that will let us capture gains of this kind of boom-bust cycle that it seems to now be more routine in our economy on all the volatility, that's how, over just going forward, where most investors are going to be struggling to stay even, we're capturing the rebounds, capturing the gains, locking them in, and just getting further and further ahead, in these strategies, and that's a good way to do things. And I would suggest people to start with the video. They can certainly call my office, just want to pick my brain a little bit, ask some questions, but the video, I think, will show some charts and graphs and kind of show how these have done over time. They'll show different client case studies and give you kind of the ins and outs of the policies. The number at the office, you can leave your information on the voicemail, is 480-970-5663. That's 480-970-5663, and that's a good starting point.